What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades, the home of the #1 stock market investing and trading channel on all of the tube. In today's video, we're going to be breaking down an EV stock that is stupid, plain out stupid, undervalued. There's not a lot of undervalued EV stocks left out there after the EV craze, the EV gold rush. Investors flocked to the sector, driving up the prices of most EV stocks. But the one we're going to be breaking down in this video is flat out too cheap in my opinion. They're not only just an EV company, they also offer electric EV charging solutions. They also offer hybrid powertrain solutions. So they cover a lot of different spectrums in the EV market, which is going to give them multiple revenue sources for them to grow off of and blast off and head to the moon. If you're new to the channel here at Touchdown Trades, we talk about the hottest stocks in the market every single day. So consider hitting that subscribe button. Everybody do me a favor, go down there and like that button. And if you like free money as much as I do, check out the link in the description for Webull. My favorite broker is offering you guys 2 free stocks when you sign up with my link in the description. Let's get it. The stock we're going to be breaking down in today's video is XL Fleet, ticker XL. This is an EV stock that has more than one source of revenue. They're just not dependent on EV manufacturing. They also have EV charging. They also have hybrid solutions, and they are geared towards providing their products to fleets. I love the idea of selling to fleets because they're not only buying one vehicle at a time, they're buying a whole package. They may be buying 10 or 20 vehicles, plus a couple charging stations, plus your fleet management software as a service, huge revenue and reoccurring revenue at that. We can see that XL came out with the news of the merger way back here. We got an initial run up from the $10 SPAC range all the way up to 15 or so. And then we had this huge monster run up, and we have since pulled back. And I think this is trading at too much of a discount down in this $20 to $18 range. It's just too cheap in my opinion. I think it will be trading back up here towards $30 a share in just a few weeks or months. Let's talk about why I have that opinion. All right, so we're here on the XL Fleet website, and here are their solutions they offer, the products that they offer. We have the XL Hybrid. The XL Hybrid system delivers a 25% mile per gallon increase and a 20% reduction in CO2 emissions. And I know you guys, a lot of you guys aren't big on hybrid. And sure, I know that the future is in total EV, but it doesn't matter. Hybrid is going to be bigger than EV for a long time because these fleets are going to be required by the states where they're operating, the states where they're doing business, to cut back on their carbon emissions. Now, business owners, they don't give 2 craps about carbon emissions. They don't give 2 craps about clean energy. They flat out don't care. The only thing they care about is their bottom line, and that the people who are using these vehicles have enough range to get where they need to go and get the job done. They are not tree huggers and do not care. All they care about is that their company is profitable and remains profitable. So that's why I think this XL Hybrid could be huge with fleets when these states such as California and New York, especially the more liberal states, start implementing restriction on carbon emissions. This is going to force businesses and fleets into a corner. They're not going to want to go with EV just yet, in my opinion, at least a lot of them, because the range, the fear of having to charge it, all that stuff. But hybrid is a short-term solution to this problem. But they also offer XL Plug-in, they have XL Grid, a suite of charging and power solutions to support fleet electrification, and they have XL Link, which is their fleet management system. This could be a software as a service, reoccurring revenue source right there. Not only do I love the fundamentals of XL Fleet, we'll talk about those more in just a second, but look at this. XL Fleet has shares outstanding of like 100 million shares. But because it was a SPAC and merged via SPAC, went public via SPAC, a lot of those shares are locked up. So the float is really only like 10 million shares right now, meaning 10 million shares can be bought and sold on any given day. North of 6 million of those shares are sold short right now. So this XL Fleet has an absolutely massive short position right now, and I think it's about to squeeze, baby. I think we're about to see a short squeeze of epic proportions in this XL Fleet. The shares are subject to a 12-month lockup period from the completion of the merger. However, if the shares are trading above $15 for a period of more than 20 trading days, then after 150 days following the merger, then these people who own the shares, primarily going to be early investors, executives for XL Fleet, and executives for the SPAC that helped XL Fleet go public. So these guys cannot sell if they want to. A ton of the float is locked up, and a ton of the float is sold short, making a short squeeze a very realistic thing. The addressable market for XL Fleet is absolutely massive. We're talking about a $1 trillion addressable market in North America alone. So if they can expand outside of North America, we're talking about a market opportunity of more than $1 trillion. And this is a space that is only growing. In 2019, 2020, barely any of the United States, the North American fleet is going to be electric. But as we get into the 2025 area, 2030, it starts to grow. In 2040, we're north of 40%. So a rising tide lifts all boats, and this is going to apply in this situation with XL Fleet. As more of these states impose regulations on carbon emissions, we're going to see companies like XL Fleet become more and more relevant, and they are just going to generate more revenue by default because their customer base is going to be required to buy these hybrid fleet trucks and these electric fleet trucks. They offer many different type of vehicles to their customer base, class 2 all the way to class 8. You have everything from a van to last mile delivery trucks, similar to what Workhorse offers, all the way to school buses, mass transit buses, tow trucks, trash trucks, electric trucks, everything. They offer many different types of vehicle solutions. And they are already selling more vehicles today than all of these competitors combined. Hyliion, Workhorse, Nikola, Lordstown. XL Fleet sold more than 4,000 units in 2020 and is expected to more than double that number in 2021. Huge growth going to the moon. XL Fleet already has some huge customers. Alabama Power, DHL. We have Pepsi. Who else we got? Hawaiian Electric, the University of Virginia, Ferguson. Some big customers, Verizon, Coke, FedEx. Some huge customers already for XL Fleet. Average order size is a big deal when you're talking about selling trucks to fleets. The big benefit of doing so is selling more than one vehicle per customer. In 2018, their biggest order was 234 vehicles. In 2019, 350. In 2020, they had an order for 1,100 units. Boom, ka-ching, ka-ching. Take a look at projected revenue real quick. We have a revenue forecast down here. $220 million in sales pipeline already locked up for the next 12 months. 95% booked already. So in 2020, slow growth. 2021, a little bit more growth. Then in 2022, we get to over 400 million in growth, and by 2024, that number explodes north of 1.4 billion in revenue. Selling the actual trucks, selling the actual hybrid powertrain solutions is great, but reoccurring revenue is better. XL Link providing software to these vehicles so the businesses can manage their fleet. You get that monthly reoccurring revenue with the XL Link. Look at these massive projected revenue growth numbers. 2020, 192%. 2021, 258%, 22, 273%, and it's just upwards of 100% over the next 5 to 6 years. Massive growth. All right, let's talk about my plan for XL Fleet, where I bought, where I'm looking to sell, all the good stuff, baby. So I am long XL Fleet. I bought 750 shares today at $21. It did sell off since I bought it. It dipped. I like it even more. I may add to my position, but I'm looking for this level down here to hold from $19, that support area, That is going to be my risk, and I'm looking for this thing to blast off and start squeezing. If it starts squeezing back above 23.50, I think those shorts are going to have to stop out, and this thing is going to head much higher. I think it has a ton of potential. I think it should be trading up here north of $30 per share, and that's what I'm looking for over the next couple of months. We also just got a recent PR. XL Fleet is partnering with Curb Tender, a big manufacturer of garbage trucks, and they're going to be working on a total electric garbage truck. I see big opportunities here. You don't really see anybody talking about manufacturing EV garbage trucks, and as we see municipalities and cities transitioning away from internal combustion diesel and gas trucks, this XL Fleet EV truck is going to be there for them to fall back onto. I think this could provide some big under the radar growth for XL Fleet. All right, guys, that's going to wrap up my video on my top EV stock that I just bought. I just loaded the boat. I'm ready for it to start taking off and heading higher, and I think it's going to do so sooner rather than later. I love all of you guys. If you haven't yet signed up with Webull, what are you waiting on? Free money. Get your 2 free stocks valued up to $1,800 with the link in the description. Come trade with me. Free trial link in the description. I'll catch you guys in the next one. Until next time, peace.